Putrajaya is expecting higher tax revenues this year, but that won't be enough to cover the surge in its subsidy bill. Finance Minister Tengku Datuk Sri Zafrul Abdul Aziz told Parliament today that the rise in crude palm oil and crude oil prices should generate tax revenue of 10 billion ringgit. Meanwhile, an additional 10 billion ringgit is expected to come from income tax and indirect tax as the domestic economy continues to strengthen in the second half of this year. This is insufficient to cover the over 40 billion ringgit surge in government subsidies, which was estimated in budget 2022 to amount to 31 billion ringgit. The government is now looking at moving away from broad subsidies and refining the mechanism for targeted assistance for the vulnerable. According to Zafrul, the targeted petrol subsidy mechanism is now being tested and should be rolled out after it undergoes up to 6 months of development. The finance minister said fuel subsidy alone cost the government 5 billion ringgit a month in June this year. On whether Malaysia is at risk of going bankrupt like Sri Lanka, Zafrul said the chances of this happening is very slim, as the country's economy is far stronger and more stable. He cited the International Monetary Fund's forecast for Malaysia's economy to grow 5.75% this year as a reason for his confidence. The Plantation Industries and Commodities Ministry says Malaysia's oil palm industry suffered a loss of 10.46 billion ringgit in the first 5 months of this year due to the labour crunch. Minister Datuk Zuraida Kamarudin said the amount was arrived at based on the average price of 1,390 ringgit per tonne for the 7.52 million tonnes of fresh fruit bunch or FFB that could not be harvested during the period. Zuraida said that plantations faced a shortage of 28,940 FFB harvesters and collectors, and based on an average productivity of 2 tonnes per day, an estimated 57,880 tonnes of FFB could not be harvested each day. With 26 working days in a month, this brings the total estimated non-harvestable FFB to 1.5 million tonnes a month. The oil palm sector remains highly dependent on migrant workers, who make up over 75% of the workforce. The minister said the government is encouraging plantations to increase the use of machinery, which would help to lighten the workload as well as improve the employees' productivity and income. Bursa Malaysia says the total market capitalisation of companies listed on the Bourse stood at 1.648 trillion ringgit as at end June, compared to 1.774 trillion ringgit a month earlier. This amid lingering concerns on a potential recession in the US and global monetary policy tightening or interest rate hikes to fight rising inflation. Bursa's research arm, Bursa Digital Research, said in a note, the 126 billion ringgit tumble in market cap to 1.648 trillion ringgit as at the end of last month is the largest year-to-date month-on-month drop in Bursa-listed firms' market cap. It noted trading in June was weaker as monthly average daily traded value or ADV moderated to 1.9 billion ringgit from 2.39 billion ringgit in May, with trading momentum lower across all investor segments, with the largest decline in the foreign ADV. Local institutions became net buyers of local equities last month after selling for the past 5 months, with inflow totaling 658 million ringgit. Meanwhile, foreign investors were net sellers of local equities, with a net outflow of 1.28 billion ringgit, though they remained net purchasers up to June with 6.08 billion ringgit. At the close, Bursa's shares were down 0.48% at 6 ringgit 22 for a market capitalisation of 5.03 billion ringgit. QSR Brands Malaysia Holdings, the operator of KFC and Pizza Hut restaurants in Southeast Asia, is said to be again delaying its domestic initial public offering of up to $500 million or about 2.2 billion ringgit on worries that poor macroeconomic conditions could hurt its valuation. Citing 4 sources, Reuters reports that Selangor-headquartered QSR is now looking to launch its IPO next year. The sources said the company was seeking to raise raise $400 million to $500 million by end 2022. If successful, the fundraising would have been Malaysia's largest IPO since South Korea's Lotte Chemical Titan Holding raised 3.77 billion ringgit in 2017. According to the report, two of its sources said QSR was aiming for a market valuation of at least 6 billion ringgit. QSR holds the sole rights from Yum Brands Inc. to run the chains in Brunei, Cambodia, Malaysia and Singapore. The group has made multiple attempts to list since 2017. It last shelved its listing plan in 2019 due to choppy local markets and domestic political uncertainty. MSM Malaysia Holdings plans to establish strategic warehouses in East Malaysia with sufficient buffer stockpile as part of food security infrastructure to ensure continuity in sugar availability during any crisis. Its group CEO Syed Faisal Syed Mohammed said, in light of a severe sugar shortage in Labuan, the group is monitoring the supply, especially to East Malaysia, to ensure that orders are fulfilled accordingly. He said there were some operational and logistics constraints last year due to COVID-19 movement restrictions and strict quarantine requirements for arriving vessels in Labuan. Noting the parallel surge in demand nationwide with the endemic phase, he told The Edge that the group has been increasing its effort to fulfill the backlog orders in Labuan. Last week, Bernama reported that the sugar stock in the offshore financial hub was experiencing a severe shortage due to late shipment and lack of supply. It said wholesalers there are constantly trying to bring in maximum volume to meet domestic demands, yet they often receive less than the required quantity. At the close, MSM shares were 1.65% higher at 92.5 cents, valuing the company at 650.36 million ringgit.